Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm your host, Tshepo, Modiba, and thanks for joining me. Tonight, I'm joined by Aly-Khan, Satchu, the CEO of Rich Management, to look at the Kenyan tea producer, Limuru tea. Aly-Khan, it's not very often that one encounters a tea producer, especially one that's listed. Your general thoughts on the business?
So, the agricultural sector of the stock market is a very small one. It's a holdover from many years ago. Limuru Tea was one of the companies that was listed there. We're talking about a market capitalization of about $11 million. And because of that small number, it tends to fall below the radar of a lot of people and a lot of investors. And, if you look at the fundamental business, that business is growing tea. Limuru Tea had a very, very tough year last year. Tea prices were low, oversupplied at the auction, and they swung into a full year loss. But we've had a very strong rebound since late last year. Prices are back at 2.5-year highs. So the fundamental business should do better in the next full year, and considerably better. But the story of Limuru Tea is really a story about a balance sheet arbitrage, because most of these agricultural companies are carrying the value of their tea estates at the cost price, the cost of acquisition many, many years ago. Right. And if you just look at the business as a real estate business, something like Limuru Tea is it's worth 10 times its current share price. So there's a dichotomy when you're analyzing it. There's a core tea business, but there's also this sort of slam dunk play that some investors are looking for. And they saw it happen with, for example, Ria Vipingo, which, while it's not a tea company, was a sisal maker. And here you saw the share price quadruple as the majority shareholder looked to buy out minority shareholders.
So just to go through that, I guess the thesis is that at the very least it should trade at the minimum of either the property that it holds or the value of the operating assets. So because the underlying property is worth so much more, the thesis is it should be trading significantly higher.
That's right. I mean, and if you don't know the geography of Nairobi, Limuru Tea was once on the outskirts of the city. And today it's basically prime real estate. Right. And real estate values, land values in the last 7 years have gone up 570%. So you're talking about a monster potential return. And I think there was talk at some point about carving out some land and selling it for real estate and then pushing those funds through the balance sheet in order to be a catalyst for revaluation of the business at the stock market. But so far that has not happened.
Now if we go back to, I guess, the core business, which is tea, it's a particularly cyclical business. They really are price takers in this environment, right?
That's right. I mean, we are like as Saudi Arabia and the shale producers are to the oil market, Kenya is to the tea market. And essentially, when we oversupply that market, prices tend to collapse. And when we undersupply it, prices tend to rise quite dramatically. And the prices have been rising since November, essentially because quite a lot of the tea bushes got spoilt because of hail and other things. And you've had this sharp spike. So as long as the tea company is able to produce the right quantity and then sell it into this price spike, it's normally a good outcome. Limuru Tea produce about 3.2 million kilograms of green leaf, pretty static. I don't think they can increase the yield much, but obviously they're going to be able to run it up on a better price structure this year.
And you touch on the fact that their yield is fairly static. Is there any prospects for them increasing that at any stage? Are they likely to acquire any more land to increase that yield?
I think, I'm not aware of any idea in that direction. I think, land prices, in particular where Limuru Tea is based, makes it prohibitive to keep it under tea bushes. But I haven't heard from them that they're looking to acquire land elsewhere and grow more tea. So The majority of tea companies, and Limuru Tea is no exception, seem to be playing within the constraints of their tea estates. They're not thinking out of the box, though this would be a good time to think out of the box, as you correctly mentioned.
So really, investors in here are really very exposed to the underlying movement in tea prices as opposed to growth from any other potential sources.
So absolutely. I mean, the business cases around tea prices, highly volatile, but that's the core business. But really, if you're going in this particular share, and a lot of people have gone into it, you're also buying an option.
Sure.
That there will eventually be a revaluation of the real estate. And when that happens, you're going to get paid out pretty big. And you have a precedent for that for Rio Vipingo, where you got paid out 400% more than the current share price was at. So there's an enormous gain to be had. But, it's a waiting game as well. And one has to be privy to what management is thinking in that direction. But essentially, pretty smart real estate has surrounded this tea estate.
Yep.
It's not rocket science to unlock some value for shareholders.
Now, so I mean, we've touched on a little bit on the balance sheet, the fact that the property book is particularly undervalued. Beyond that, how does the debt levels look like for this business? Given the cyclicality, you'd assume that that's fairly stable.
Very conservatively managed, absolutely minimal debt. So it's very, very conservative. There is maybe some working capital, but it's nothing significant. This is a business with serious assets that is not run in any leveraged kind of manner. I mean, they did have a full year profit loss after tax. Because of that low price structure I talked about, but it is not really significant, and the numbers we're talking about are not material to any investor.
So really, if you're looking at acquiring this and the business case, it's really one of those that you buy and put at the bottom of the drawer and hope at some stage that the property valuation lives up to it.
That's right. I mean, there are two complexities. It's very thinly traded. It's not very often that shares come on the market, but they are doing a split, 2 shares for every one held, to try and increase the liquidity at the stock market. But and I think this is a share that you can't just decide one day to buy it and your order will be filled the next day. It might take a few days to complete the order, and for not very many shares. But I think, as an option trade, it will come off. We know it will because we've got a precedent, and I think it might come off much sooner than people are expecting.
Okay. If we cast our eye elsewhere on the Nairobi Stock Exchange, one that I think is particularly interesting, Kenya Airways. Your thoughts about that business?
Well, I think the full year, and they're going to be releasing their results at the end of June, is going to be an annus horribilis. We know that the first half was brutal.
Yeah.
There is a second half is typically slower than the first half. They've leveraged to buy all these planes, and unfortunately, they just did not get enough bums on their seats. And it's as simple as that when you come to the airline business. I mean, there were challenges which we know about. Ebola, West Africa was the jewel in their crown. Basically, the core business was uplifting West Africans through Nairobi to Asia and then bringing them back. The Ebola problem sort of knocked that out. Whilst they were quite, there's a lot of bravado saying it's just 5% of our revenues, but in terms of profit, it was substantially more. So there have been lots of challenges. We've had all these travel warnings, various attacks have not been helpful. But the share price now is at a multi-year low. It's at about 7 shillings a share. I think there's going to be sticker shock around that full year earnings release, which I think is going to be a pretty big number, probably the biggest corporate tax loss in Kenyan stock exchange history.
Wow.
But having said all of that, there is a business in there. We are traveling more. Price per kilometer is, it remains high on the continent, but there are serious challenges ahead. I like to think that a lot of the bad news is baked into the price and that potentially there can be a rebound. And I would have thought that, you know, some of the Gulf carriers might be looking at this. You know, we've seen Etihad and others be quite acquisitive, and I think there is a case for a bolt-on acquisition here, but that's sort of a bit down the road.
Now, I mean, one of the, I guess, potential tailwinds for this company will be a lower oil price. That's maybe one of the few benefits that they may have.
So this was extremely disappointing, actually, because if you look back, when we saw that huge drop in the price of fuel, the best performing stocks worldwide were actually airline stocks, because as you quite rightly say, the biggest expense item is fuel. And if the fuel price drops in half, you know, you're in a very sweet spot. The problem is Kenya Airways had a very sort of medium-term hedging strategy out to 2 years. And as such, they were not able to ride those lower oil prices because of the hedging structure around their book. And it was a big disappointment. And personally, I wrote about it and called it a mistake to take out such long-term hedges. And so therefore, they've so far not ridden that lower oil price. Sure. Some hedges are coming off now, and they should be able to get some of that benefit. But I think, you know, the share price did not react higher in line with other stocks because the market saw that they were not riding that particular, they were not able to surf that particular wave.
So fair to say, quite a bit of uncertainty. Is this one you'd say is worth taking a punt on?
I think, look, if I was getting into it, this is a pretty interesting price. I think you've got a volatile period ahead of you, ahead of the full year results. You know, you've got quite a lot of complexity in the business right now, over leveraged, having to trim down at speed, few challenges at the operational level. So there's a lot of news that can come out, but I mean, we're near a rock bottom level. And I think, you know, if you look out 12 months, you're going to be in the money. The question is the journey between now and that and that end of that time period.
Perfect. Let's leave it there. Thank you, Aly-Khan. Thanks to my guest, Aly-Khan Satchu, the CEO of Rich Management. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.